Hello and welcome back to the July 2024 Chart Champions Roundtable event. I hope you all are doing well. It is a pleasure to see you. My name is Scott Silva. I am a professional trader. I'm not on mute this time. See? And I am a longtime member of Chart Champions, and I am absolutely pleased to be here with two of our longest running coaches, Daniel and Igor. Daniel and Igor, hello, how are you?
All good, thank you. How are you both doing?
Doing lovely, doing lovely. Just got back from a nice vacation and spent the last 3 days in the airport. So, what a beautiful end of the trip, right?
Hello, hello. Yes, hello everybody. Hope you're all doing really well. And yeah, it's nice to have you back, Scott.
It's great to be back, and it's lovely to see some of our members here today. Juju, Nick, Up, SB. Hope you all are doing well. Glad you guys have tuned in. We have an exciting installation here for you today. We are going to be talking a little bit about the tools of the trade and the key resources that Daniel and Igor are using in order to be extremely successful and consistent in their trading. We'll dig in a little bit to how they're selecting these tools, talk a little bit about their favorite tools and some of the inner workings of those tools, and then we'll talk a little bit about how you, as a beginner trader or as an advanced trader, can have an edge in selecting your tools so that you're picking the right tools for your personal toolkit. But before we do that, I would love to hear a little bit about this market. As you all know, we have the end of the month today, last day of the month, usually a big trading day, can be. We've also got the FOMC meeting today, the interest rate decision here in the US. Additionally, we've got a lot of different news coming this week, and we've got quite a few big earnings reports. So, would it be a Chart Champions video if we didn't do a little bit of technical analysis? So, Daniel, would you like to start us off? Maybe give us an update on BTC, show us your TA and what you're looking at?
Yes, absolutely. Yeah, I'll give a quick run through of the Bitcoin. So yeah, obviously we had quite the drop on month. Well, this whole week's really since taking out 70,000 psychological number. I talked about this briefly in a video that I made today, and so really simply, this all was really caused by just a stop run of 70,000, and since there, obviously, a really heavy pullback to the downside. Overall, I am actually building a long trade at the moment, so I'm like compounding into a long. I am looking for higher prices. Um, but I'm also aware, and this is the way why I'm compounding into it relatively slowly, that we overall just have a sideways range to be trading. So I think on the higher term timeframes, everything is still like good. I am still overall remaining bullish. I do still think we can get higher prices to come. Locally, obviously, stronger pullback. We've seen like quite a strong pullback relatively quickly, but at the end of the day, nothing really out of the ordinary here. We still do have high probabilities of continuation from my findings, like to head back up again. Especially what I like is that Coinbase hitting 70,000 to the dollar. We've seen this many times, the initial reaction, but overall still coming up and taking it out. So yeah, my game plan is longing the dip with a compounding entries all the way down to the monthly. If we lose the range low, then I'll be out of that trade for a loss. But I am looking really to bring this up to above 70,000 with a big, hard, what I would call like really big resistance on the daily above us. I feel like if we are to head down to the monthly, it would be really nice to see this come down in like an ABC. So overall, I remain bullish. I am looking for new highs to come. Okay, so above 70K. But I will be looking to really be careful between 67 500 to 68 300 for just in case we are, in fact, instead of coming straight back up and V-shaped reversal, we get more of this A into the B, down for the C. At this point, I would still be looking to long the dip down here. But then I would also secure myself a short should we get this more bearish reaction. Really, for me, between 67 500 to the daily, that's where I'd be saying if we're going to form a B wave, that's where the B will be put in from Elliott wave perspective. So, yeah, summary for me, overall bullish on Bitcoin. I am building a long trade, but will take a more of a hedged short. from 67,500 to the daily here. Should we get some form of bearish reaction, bearish divergences, lower term time frame triggers, this is where I'd look for that hedge, reclaim, the daily, and yeah, then at that point I would still stick with what overall I believe and head back above $70,000. But locally, yeah, looking more for the ABC, and that's where I'd like to get into the next short trade on Bitcoin and how the longer term picture is building along within this range. So yeah, that's my quick little perspective on Bitcoin for you.
Lovely. Thank you so much for sharing. And I did also note on Coinbase chart that the high actually at the moment, standing high on the chart, is 70,000 even. And I mean,
Yeah.
you don't see that a lot. And when you do, it's typically a sign that someone had a big limit order there waiting to sell that level. And as we saw, it had a nice follow through, but has got some support there at the middle of the range. So it'll be interesting to see where BTC goes today, if at all, if it gets some injection of volatility with the FOMC.
It would be nice if we can.
Yeah, love that. And Igor, just passing it over to you, would love to hear your insights on S&P 500, Nasdaq, how you're trading these markets, what you're looking at, and what we can be keeping our eyes on for this afternoon as we approach the end of the month here.
Okay, let me see if I can share my screen very quickly there then. So sharing.
No crashes.
No crashes, no crashes. There you go. So
Yes, we
if
see.
Daniel could put that up on the... Okay, so let me know when it's up
That's
and I
all up
can
and ready, mate. Yep.
dive in. Perfect. Okay, so I mean the stock market has been really good. So you're looking here at the S&P 500, and I mean just let's start on the higher time frame very quickly. So this chart here, I'm using just the fractals, which are swing highs and swing lows. And so we made the all-time high pretty much at, call it 5,700. Okay, so we made that all-time high. And you can see, like, if you just plot, for example, a trend line, you can see that once we broke below and we opened below this is RTH, by the way. So we're only looking at the real trading hours, okay? So not the electronic trading hours overnight. So you can see here that as soon as we open, okay, here on the Wednesday, the 17th, when we open, we gap down and we never fill that gap. It was there, broken off that trend line and like lower. So we dropped, we had a little retracement, and then we open again with another gap. So we've spent down here now on this lower gap. So we touched it first, and then we completely filled that gap. So we spent quite a long time down here, and then yesterday we came all the way down. But look, yesterday's close, it's very interesting because yesterday we actually closed at 44 all the way at the low. And today, look where we open. Again, we've got a little gap here. If you take into account just the previous day high, we have a gap, but we're heading towards the upper gap. What I've noticed here, same way as we look at this range broken to the downside, we're kind of looking at this range here, similar, but now instead of like looking at to the downside, now we're looking at for the upside. So you can see here that we're just trading above now this sort of like trend line coming down. And if you wanted like a quick tip here, you can always use a 5 simple moving average because it's very, very similar to a trend line, as you can see, and we've broken above that, finding that nice support at the 50. So this is really nice to see. But obviously today with the CPI and the FOMC, let's see what they do, because bad news, we can come back inside the range. That would be bearish in my opinion. We have a relatively poor low down here, to be honest, so that can come to fruition, and if so, then we'll see that 53.82, so 5,385 ish, which is the gap fill from the lower. So that goes all the way back to the 11th of June. So next targets, I've got my alert here, so that will be 5,585. So this is where would be nice. We're currently kind of in the middle of the gap. Let me just push a fib here. I'm going to do a fib from the low to this high. Yeah, we're just coming into that sort of like 50% of the gap fill. Not quite there yet, so hopefully maybe towards the latter part of the day we can trade to there. Filling it would be really great, and then we can reassess. But yeah, pull lows at the low, and I'll show you this now on a lower time frame chart, which is just here. So this is showing both sessions. So you've got here the real trading hours as well as the overnight trading. And you can see yesterday we came down. So I'll put a little line here so you can see better. So we came down and we basically we've made a double bottom. Okay. We obviously had earnings last night, Microsoft, I think it was. And we obviously today we're just not giving anything back. It's been one time framing the whole day long, and we're still building value up here at 5,560 currently. So the gap is slightly just above. So yeah, I mean, this is a market that it's been ranging for quite so long now. We've come down, made a double bottom, filled the gap, higher time frame. There's another gap below, but we don't have to go there yet. And yeah, we're trading up here above the consolidation. So, go with the break. The break is going higher, so we have to stay with that. And you can see if I just hide the overnight again here, you can, oops, the wrong one. There you go. You can see that there's that nice gap fill there just at the very high there. So, yeah, that's my thoughts here on the market. It would be nice to go and fill that gap up there. If later we get a move back inside here, then I'll be a little bit more bearish and we can fill all of this. And mind you, during the kind of like volatility that we have with the data, sometimes we can see 100 points move. So I wouldn't be it wouldn't be out of the realms of possibility to come all the way back in if we get a nice rejection. Yeah, that's how I'm looking. But it's been really fun to trade this market, especially the ES. NQ is a wild beast. Where it just moves so fast through like the liquidity levels, and ES has just got that little bit more ease to it because there's just more depth to that DOM or the ladder. It's very volatile with one or two lots. So yeah, it's been great fun. It respects the values very well. Yeah, it's been great last few weeks, to say the least. So yeah, may the volatility continue, and yeah, let's continue trading these markets.
I second that as well. The volatility has been pretty incredible in these markets. And while I was away, I heard that we actually made new all-time highs. Was it for 7 or 9 days in a row? Something like that.
Yeah.
So
Yeah.
this market has been pushing these buyers, had their chance really to push this thing higher. And over the last week, 2 weeks, we've seen really the first inklings of some selling, maybe a small, I wouldn't call it a correction, maybe a little bit of a sell-off here. But now that we've had price develop a little bit, we've reached some key levels in terms of support on the chart. I've actually noticed that overnight trading, the London session, Asia session, I haven't been trading it, but I've been observing it, and that it's been quite bullish, that they're continuing to try to push this market up. And then it actually got some legs today with New York coming in and backing that up, some strong positive delta at New York, maybe in anticipation of the news we have later today, anticipation of the end of the month. But we will see. We'll certainly be keeping an eye on this tape, on this DOM, and these markets to look for great opportunities. So I appreciate your update, Igor. Thank you very much, sir.
No, you're welcome. And just one last thing. So it is very interesting that ES from the all-time high dropped exactly 5%. And I find that just amazing, like how it came down 5% and then for that nice bounce. And then we got the double bottom to the tick down there. So I find these markets really kind of, I don't know, just amazing to see the respect of these levels. And NQ did a 10%, so 10% on NQ and then half, and it just shows you the type of volatility. So in one side you've got NQ, the wild beast, just going double the strength, and ES going, okay, you know what, I'll go down as well, but only half of the NQ, so a lot more volatile NQ. But great for us traders. So plenty of opportunities, and yes, we are blessed because these markets trade pretty much 23 hours out of the day. So we're blessed.
23/7, 5 days a week. Sometimes if you want to trade on Sundays, make it 5.5, whatever.
For that, we've got crypto.
And then we've got crypto, which kind of has a mind of its own right now. And you see these things, and this is a little tangent here, but you see these things like the Bitcoin conference in Nashville this past week, where you have a lot of political rhetoric coming out about Bitcoin now for the first time, maybe ever, other than sort of in the side notes or whatever. But you've got major presidential candidates, you've got other massive Bitcoin holders who are saying, "Don't sell your Bitcoin, hold on to your Bitcoin. We're going to fire SEC chairman." Really strong rhetoric, and so I think that's fueled a little bit of the volatility in Bitcoin, at least. But it's been interesting times for these markets. Not a lot of action in the, at least for me, in the altcoin section. I haven't been trading that too much. Have you been trading altcoins at all, Daniel? A little bit?
Been trading mainly Pepe at the moment. Again, I just really enjoy trading that coin, but taking a few little scalps also on Flocky and IMX. But yeah, I'm now just trading Bitcoin for the past 2 days. Just waiting for Bitcoin to have a bit more resolution for the waiting on the alts.
It kind of ties into your high time frame versus low time frame lesson. You kind of got to zoom out at these points in the chart and really take a good look at where price is, where price has come from, and where price might be going. And so for those of you who haven't checked that lesson out, highly recommend that there.
Yeah, no, definitely. I think a lot of people when they see these drops, it's like funny because they get so really, really, really scared. But obviously, when you zoom out a little bit, and it's the same on the stock market, same on Bitcoin, right? You zoom out, and it's clearly just strength, new all-time highs, continuation to the upside. So, these dips really, if you're trading the trend on the higher term time frame, these are the dips that you want to be getting into and buying, not getting scared and selling and then kicking yourself in a few weeks when it hits new highs again.
Yeah, the dips are for buying. Sip the dip.
Amen.
It's certainly a bull market. And even with the drops we've had over the last couple days in QES and BTC, no really structural damage has been done on these charts, at least on the higher time frames. So
Yeah,
it'll be interesting to see if we're at a turning point or if we're at just a ranging point in the chart.
yeah, for sure.
I mean,
Right. Well,
just to briefly touch on BTC, I quite like BTC on a higher time frame, to be honest. Like the sideway range that we have on the monthly higher time frame, it's been 1, 2, 3, 4. This is the 5th month now, and we're going into another month. So it's going to be very interesting when we do get out of this range, because we've not done 1, 2, 3, 4, 5. We've not ever done 5 months consolidating at a level. This is a large range, so I expect like immense follow through once we get out of like 72 or 56, because of just the nature of where we are. So if it's to the upside, I'll not be definitely fading any moves either to the up or the downside, because I feel like it's going to get that follow through, just like you see on a normal chart, higher time frame or lower time frame. When you do consolidate for like quite a few hours, for example, if you're day trading, when you get out of that range, it typically gets that continuation. And I feel like BTC will be the same here on this monthly higher time frame.
agree. And it'll be interesting to see where it goes because, as a lot of you know, and in many countries this year, we have elections, a lot of some cases turmoil and indecision. So it'll be a fascinating time for the markets. And even with all that, you have the AI tailwinds pushing these markets up, and potentially now some rotation from the big stocks, the Mag 7, into small caps, the little guys who have been underperforming over the last year, while Apple, Microsoft, Amazon have just been ripping faces. Some of these other markets are going to, I think, eventually get some attention, get some investment, and people are going to take profits, just like on Bitcoin. 70,000 is a good level. I mean, somebody was probably taking profits there, would be my estimation. Who knows? Right. Well, with that, why don't we go ahead and transition into our topic for today? And just really quickly to our audience, if you don't already know, feel free to enter your questions either into the YouTube chat if you're not a member, or if you are a member, please look under the contenders section in the roundtable questions section. Post your questions there. So I had a couple fun trivia questions for you today, and I'm going to go ahead and do one now. So if you're listening, please, take out your typing your fingers, and we're going to put some questions in the chat here. So the trivia question today is all about how to identify probable opportunities when using trading tools. Okay, so here's the question. Listen up. How much more likely are traders to identify profitable opportunities when trading while using advanced charting tools and technical analysis software? So read that one more time. How much more likely are traders to identify profitable opportunities using advanced charting tools and technical analysis software? Interested to know what you think. So this is basically using these tools can give you a percentage of an edge. And what I was reading, this was actually from the Evolution Role of Technology in the Financial Markets by the IT Group report. And essentially what they said was people using these type of tools and analysis actually have a better chance of identifying profitable setups. So let's see, what have people said? 85% from up. Okay. That.
Ooh, that's quite high, isn't it?
It's quite high. Let's give it a minute, see if anybody else is in.
Very likely.
Any estimates from you guys over there? I know you may know the answer just from having looked at it, but
I kind of like, yeah, I know the answer, but I think it's high. I mean, not high, but it's having the right tools. It's like a doctor, right? So, you can't just go and operate on a patient with not very good tools. You need the good tools to do the job properly. So it should be quite a nice number.
Yeah,
Yanis
I
is saying
thought it was like
90%.
higher than what it. Obviously, I've seen the answers, but I thought the
Yeah.
answer was the percentage was going to be higher. To be honest, that
Yeah,
would
me
be my
too.
first thoughts.
Yeah.
me
So
too. It's a
I'm
little bit
looking at,
surprising.
yeah.
See, Jade says 50%. Woodchopper says depends on who's teaching you how to use the tools. Hey,
Yeah,
Oh,
that's true.
nice.
maybe within CC we might have a bit higher here. Diego says 70%, CIS 55%. Giannis says 90%, CP 55. Those are all really good guesses. And honestly, I would have guessed around that same 50%. But the statistic is traders who use advanced charting tools and technical analysis are actually 25% more likely to identify profitable trading setups compared to those who don't use the same tools. So by actually having an idea of what tool you're using, having a good understanding of the tool, and really a good working knowledge of all the different, I guess you could say, tools within the toolbox of the platform that you're using, you actually get a 25% a better chance of identifying profitable setups. And I think that's a pretty good edge, and why I wanted to have this conversation today, because Daniel and Igor, over a long period of time, 4 years, 5 years, have demonstrated that they think capable and that they know how to identify tools that can help them achieve their goals in trading. And so I wanted to touch base on this, and thank you all for your feedback. Appreciate that. And with that, I'd like to just read off one quote from one of my favorite traders. Some of you may have heard of him. His name is Paul Tudor Jones. He's a billionaire hedge fund manager, and he owns Tudor Investments. Some of you may have heard of his Robinhood Charitable Foundation. He gives away billions as well as being a billionaire himself. So he's obviously had some great success in the macro world. And this quote from him, I think, is really important. And what he says is, don't focus on making money. Focus on protecting what you have. That's from Paul Tudor Jones. And for me, that rings very true, because a lot of times as traders, we can tend to focus too much on we don't have, right? And then actually lose what we do have. Whereas we need to flip that mindset and focus on protecting what we have, more importantly than trying to grow what we don't have yet. So, right. So, with that, let's kick off these questions and get into it. So, Igor, I'd like to start with you. And the first question I have is just what tips would you give, and what advice would you give to traders who are looking to assess the effectiveness of a trading tool?
I mean, there's so many tools, as we all know, and I think a trader or someone trying to be a trader will go through the toolbox cycle, which is trying many different tools, many different strategies, going around in a loop, and then they come back to a resolution. And I think my tip, and having gone through that myself and focusing on things that perhaps weren't so good, and like not time wasting, but realizing, oh, that's not for me, is to, while you're going through the process, to try and minimize like looking at too many things at one time and just focusing and like really like for example some back testing on that tool to see if it's for you. You know, don't spend too much on that. Just see, okay, does this fit my system, my style, my time, you know, all of those things, and then you can then take it on. But focusing on just one, I mean, you can focus on one or two, but I would say master and then move on to the next one. And then eventually you'll come to a point where you have, you know, one, two, or three nice tools that you kind of really look for when you're trading. It's the first thing you look at. Oh yeah, let me just see this, and it ticks your criteria, ticks your boxes. I think, yeah, for me is just really hone in on that one tool, study it, master it, and then move on to the next one until you find that nice strategy overall. Yeah, I think that's very important, because when you start looking at too many things at one, you know, in one go, it becomes that brain overload, and you just, you know, we're not designed like that. You kind of need that concentration and, you know, moving on. So study religiously that one tool and then move on to the next. It's my kind of like tip on that one, and I've done that many times on many tools, as you know. So yeah.
And as you go through your trading career, you will find new things that interest you, new things that look really cool on the chart, or maybe look cool to start, but you'll find out maybe the effectiveness of them is not so good. Maybe like learn about RSI and you think, oh, that's really that's it, that's the hot stuff. But then you learn over time, okay, maybe RSI is a little it's sort of a lagging indicator, right? But you look at order flow and you say, okay, wow, this is real time. I'm watching the orders come in as they're being bought and sold, and you realize, okay, this is pretty effective, you know. And so,
Yeah, absolutely.
like you said, the more tools you have on the chart, the more opportunity you have to give yourself analysis paralysis. I think you have to be selective as well when picking these tools.
Yeah, 100%. Like, yeah, you can throw so many things at your chart, and it's just going to give you that, you know, paralysis. And sometimes when I put a chart and I've got like TPO and market profile and like volume profile and then a couple of moving average, or, you know, I can see that for a new trader, they would look at that and be like, oh, wow, that's a bit busy. But when you just know and you are used to it, you basically just take your eye exactly to what you want to see, and then you remove. I can, for example, look at a chart and remove everything out of it and just hone in on what I actually want to see. And I think that's kind of like important. And I remember when I created some templates for Exo and Atos and Quantower, etc. You know, I remember removing the price from the axis because I wanted traders to just literally go straight to what really matter. And I think that's another way of doing things, just so that you don't get lost on all the different levels, but instead you have a naked point of control or a naked value or untested. You look straight at it. Oh yeah, there it is, and that becomes a visual aid, and it's really nice. So yeah, a few tips there.
Yes, absolutely. Thank you for those. So, Daniel, switching over to you for a moment, what do you consider the most important factors when you're selecting a tool or looking at a new trading resource for yourself?
Um, yeah, I would. So obviously, this is the good thing with Chart Champions, right? We teach pretty much every tool that's in the market, nearly, right? Not every single thing, but like the majority of all the big tools that we've taught about. And so, what I would recommend really for people is to learn or watch all the content, like listen to the tools, like understand all the tools, and then work out like a strategy that works for you based off of like trying them out essentially. So you could try you know, the simple moving average crossover strategy, right? And if that works for you on a long term, then brilliant. Like you don't need to start to use more tools. If that's profitable for you, then you can be profitable just for that, right? But if you start to see, well, actually I can start to test out making my trading strategy more complex, you start to maybe add in a little bit of order flow, you start to add in some Fibonacci, and over time you can start to refine your strategy, make it a slightly more complex. But at the same time, it's like really important that you're running like some statistics on this, journaling your trades. So I think I would say the most important factor when selecting a trading tool is number one, that you fully understand what that tool is and how it's supposed to be used. And then number two, that you can back it up with proven results that you are profitable with that tool. And then let's say there's 1,000 tools out there. It doesn't matter what we say to use. If you can be profitable with one certain tool, then that's the tool you should use. So yeah, I think number one, fully understand it. Number two, prove your results. And if you can do that, then that's the most important thing at the end of the day, that you can be profitable with that tool, I would say.
I want everybody to listen very carefully to what he just said, because he just gave us the answers to the pop quiz, okay? Of trading, if you can pick a tool that you fully understand, then you can run statistics to back it up and prove that the strategy has an edge. That is the golden ticket right there. It doesn't really matter what tool it is, whatever tool works best for you. If you experiment with it and you try it that way and you do the homework, and I feel that it will ultimately lead you to a successful strategy. So very, very, very good point there, Daniel.
Cheers, mate. Thank you.
And Igor, I know just watching you from the last couple of years, every time it seems like it's every day, maybe every other day, that you've made a new update, you've pivoted your template just a little bit, and you've just made it a little cleaner, a little more dialed in, always moving towards not the perfect template, but the best template that you can have, and that changes over time with the markets as well. So I would love to see if you could, for us, highlight just a few of your favorite tools and maybe explain why you love them so much.
Tell you what, let me share my screen and I'll show you two of my favorite tools. So if Daniel, when you're ready, if you could just pop them up,
That's
I will
showing now, mate. Yep.
Oh, good. That was quick. It's not damaging today. It's actually working. So usually it breaks. But right. So here's two of my favorite tools. Right. So on the left here, and I hope you can all see it. On the left, you have TPO. Okay. So this is the market profile, which you just saw there on TradingView earlier when I was showing. So this is the same chart, but this is such an amazing. Jim Dalton teaches it really well. I mean, he's like the godfather of this thing, but it's one of those tools that really helps you just take one look at the market and understand exactly what's going on. Obviously, I'm not going to go into much detail. That's what we do at Chat Champions, because there's just so much to go through in a 1 minute. But I love the market profile, in other words, TPO here, because it gives us so much information with one glance. And I think that's the important thing here. One glance. I look at this market profile and I can take so much information from this today trading session since the New York Open. For example, like a good high, a good low, where's the open, where's the 50% of each candle, where's the this represents each letter here, each kind of like row of letters represents a 30-minute. You can then see the volume profile here. So this is the volume on this current 30 minutes. So if you know about auction theory, you know exactly what this means, and it's just such an incredibly piece of information that it's crucial for day traders. And then on the left, you have like the nitty gritty of the order flow, which is, okay, what is the delta at this specific level? So with just this one tool, you can be a trader because you can see everything just by looking, like the shape of the profile. Is it to, what's the sentiment, like clearly here today a little bit more bullish, but quite a long extended like P shape. So there's just so much information that you can take for one tool only. My second favorite tool, it's got to be, Daniel, the .25. This tool is not a Fibonacci pool. This tool is a risk management tool. This is by far the number one tool that all traders should understand and have it on their toolboxes. This one right here is just a Fibonacci tool with the 0, the 1, the .25, which is 25%, the 50%, and the 75%. And it's just mind blowing because you can use this as a risk management tool. In other words, like if you're on a range trade, for example, on the ranging market, you want to be selling as it approaches, or you want to be like a bit more conservative. If you're taking longs, you don't want to take longs as you're approaching the 75. Inversely, if you're approaching the 25%, you don't want to be taking short. So it just basically gets you out of jail, because if you are, let's say you're short from the 7.5 and you get down here to the 25%, this becomes a brand new trade, because your risk to reward now is decreased, because it's just incredible. So these two tools, so one is a one glance at the market by using just market profile TPO theory. It's incredible. And you don't have to take my word for it. You just need to study it. And the other one is just a simple range tool that really gives you like that trade risk management just by doing a simple pull. And I think, in my opinion, is just really good. And obviously on the background, you've got the DOM surface, which shows you the actual real liquidity as you approach these levels. So in other words, this is very similar to Bookmap. And you can see the big orders coming in, going out. So those are my favorite tools. So real liquidity, what is it? It's the DSF here in the shape of a Bookmap, where you can see the real orders coming in and out, accompanied by that market profile. And I think for me, this is it. This is like the some traders want to look at what actually works, and I think this and it's no wonder why so many traders look at market profile. And a lot of traders, don't even look at it and goes unnoticed. But when they do look at it, they go, wow, this is how you organize that data. This is the fairest price. That's the value area high. That's where we look for shorts. That's the value area low. Well, clearly there. Where's value? There's just so much here. I get really excited talking about it, because honestly, one glance and you've got your day pretty much planned. Is it one time framing higher? Is it bullish? What's the sentiment? I could go on forever, but yeah, this is brilliant, especially when you combine it with that nice Fibonacci pull, which is just that risk management. So yeah, here's my two nice tools for you all. And hit the like.
I love it. Your passion definitely comes through the screen, not just now, but whenever you speak about it. It's very clear that you've worked really hard on these to get them to a point where you can just basically point and click, or not even click. You have some hotkeys that you're using, and the hotkeys, boom, you're in, you're out, you're making money, you're using your tools, and anyone's really interested in learning more about the DOM surface, Igor did a really nice lesson on that just a couple weeks ago. You can check out on chartchampions.com. So highly recommend that. It's a tool I use all the time in my trading now. It's basically a tick chart with the live CME volume, so you can see orders being taken off, put on, see where maybe there's heavy orders on the bid, a lot of contracts sitting waiting to be hit. Same thing on the ask, on the offer, the upside. So it's a very, very, very interesting tool, and one that I really love as well. So thank you for sharing.
Yeah,
appreciate that.
Absolutely. And that liquidity tool, it's not, I mean, a lot of traders can get lost looking at it because it's quite overwhelming and there's a lot of information. But if you just understand the basics, for example, like if you're on a trade and you can just have it on a side, it can sometimes aid you to take that trade just a little bit further. So instead of like collapsing your trade a little bit too early, which is like what 60% or 70% of traders do, they collapse the trades. The winners, they always close them really early. Instead of like letting them run a little bit. With this, you can actually see that liquidity build above or below price, depending on the direction you are. And then you can just say to yourself, you know what, I'm going to try and hold this position a little bit further to get to that big pocket of liquidity. Those orders are there waiting. So why not just take that heap of, trust and gut feeling and just let it go there? And more often than not, it does go. It's like a magnet. Price likes to go to those orders, especially if it's trending and you can see those orders like now above. It can really help you just maximize a little bit of your trade plans. And inversely, if you're on a losing trade, for example, and you can see all of those orders below, well, then just close it early. So instead of like waiting for it to hit your stop loss, just close that trade early. It's not working. It's going to that other side. So just call it a day, flatten it, and that's it. So it really helps you. So you don't have to know the alls ins and outs, but it really helps you just with your trading. So yeah.
And just to add one thing to that, it really doesn't have to be the DOM surface. It can be anything. We have one member who I want to give a quick shout out to. His name is Mupf. He has essentially created his own strategy with trading the Nasdaq, and it's based off the 8 EMA as well, in combination with looking at the 1 minute time frame delta, max and min. So, really, if you select one of these tools and you put the time in and you realize that, hey, there's an edge here, practice it and you work on it and you hone it into a strategy, then you can be really successful, just like our member Mup. And so, yeah, huge shout out to you, man. Keep doing what you're doing, and really exciting to see all of our members actually now, well, a few of them also jumping on the Mup train. So it's very nice to see. And I would be curious to know, Daniel, it could be something as simple as TradingView, it could be something more niche like exocharts. What about for you? What do you consider your favorite trading tools that really have given you an extra boost in your trading?
Yeah, I would say, like for me, I always have like a tool that I feel is most useful, and it changes like every few months. So I would say at the moment it's simply the anchored VWAP. Like for me right now, anchored VWAP is really nice tool, really for altcoins and also for Bitcoin, but really on altcoins massively. And it's really simple. It's like a really easy tool actually. So you have to select a major pivot. So for example, I would select this major pivot of the start of this uptrend after the failed auction, right? And then really simply, we're just looking then at the anchored VWAP, so the volume weighted average price of the start of the pivot that you select. So we can see that this support would then be coming in currently, and this is obviously changing every day, but currently at 63,240. So I would then use this. Not, I would never buy only for the anchored VWAP. You want to really see this line up with some nice confluence. And one of my favorite tools to line up with this is going to be the value area, so value area low, value area high, point of control. I love to take the trade, for example, this lined up with the value area low of this range. Then value area low on anchored VWAP is like super, really nice tool. You know, uh, yeah, that for me is my favorite tool at the moment. But like tools that I've used for like more longer that have always been useful for me are Elliott waves and Fibonacci. Those two are ones that I will always say are useful, not just come in and go out. Like anchored VWAP is a tool that comes in really good at the moment, but then in a few months probably stops being so useful. And so, yeah, you always get kind of that with tools that are really good, and then they start not working, and then a year later they start being good again. But yeah, always you can count on Fibonacci and Elliott waves. And yeah, the value areas. I'll do a quick example of these value areas because like these are really simple as well, like something I can talk through. And so like this is with like your previous range values, and so just for an example, when we view this as like a kind of a previous range, so to speak, and now we're like trying to break out and form, of course, we can bring this to closest price action. It's the values are minuscule difference. But a theory that I can teach really quickly is really simply if we look at a range, when we break the range, okay, so if this was a multi-year range and now price is essentially trying to break up and continue on to, let's say, $80,000, right, and form new price action in all-time highs, then this would be our previous range values. So for example, then this value area high, we can see how it came back down here. Okay, so you can see here on the weekly perspective, we just mark out the value area high. We can see how here we ever so slightly front run that value area high, did get a big bounce. But then when we got this fake out down to around 54K, this was also back testing around this zone of the old value area high at a range. And so the theory is this is support, and this support held really well. Because I would never look at it as an exact dollar, right? You have to view this as a zone. And so we come down, we've tested it a few times, it's held really well. If we test this again, then of course the probabilities of holding for a third time, because although this was slightly front run, we can still say it bounced off of around this zone. This time we got a bit more of a test deeper into it, but ultimately failed auction, nice long. As you know, if you've been watching my streams, I had a long around 58K, so that was based off a failed auction. But if we test this again, then of course the probabilities are much higher that we'll be breaking down, and then really simply get acceptance into value area high. Well, then we look for value area low. It's kind of as simple as that. That's obviously a very higher term time frame, but that same theory working really nicely on the lower term, well, let's say the daily perspective. Again, you never look at it as an exact dollar really, but we can see when we take the range that we're in currently, right, we got acceptance into the value area low, and when we topped out a few days ago, Monday, right, at $70,000, well, we came within literally like $5-10 of that value area high. So it's just like a really simple tool that I find really, really useful. Again, you always want to look for confluence, but yeah, just the simple fixed range pool using that. And I do like the fixed range tool in confluence with that anchored VWAP. That's kind of like my really most loved tool at the moment. But yeah, then going forwards, of course, just Fibonacci all the time sort of thing. Fibonacci, Elliott waves, and of course, how did I forget like the higher term time frame levels, daily, weekly, monthly? Like they are the bread and butter, I suppose. That I would always use along with naked pointer controls. So yeah, there's 4 tools that I would use continuously all the time that I think are like the hard understone rock of my trading, and then I'll have tools that I'll use while they're actually working nicely. And right now that's anchored VWAP and the volume profiles for the way I'm trading anyway at the moment. So yeah, that would be my my answer.
Awesome, thank you. And I think you made another really good point in what you just said, and that's that, you know, even though one tool can be working really well for like, let's say 6 months or a year, maybe the next 6 months or the year after that, the tool doesn't work so well. And I think so just as importantly as selecting the tools, we have to be able to monitor them on an ongoing basis, continue to analyze the statistics to see if they're working, if they're not working, and just overall be mindful that sometimes trends fade, right? And tools fade, and sometimes they're more strong and sometimes they're weaker. So I thought that was a really good point as well.
Yeah, and just to add really quickly on that, and this is why it's so important, obviously, to run statistics, because then you can see in your statistics if you suddenly, or journaling, you could also do it by journaling, but just start to notice, for example, like the one that I'll just mention really quickly is swing failure pattern, right? For the past, like literally like 10 years, swing failure pattern just extremely OP, like really, 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 really good. But if you look over the past like 6 months, like swing failure pattern is not as good as it was. It's still like okay-ish, but it's nowhere near as good as it used to be. And so it's just by recognizing that through journaling or statistics scheme of seeing the trend changer of, oh wait, swing failure pattern is now nowhere near as good as it used to be. You know, what is working better? And then suddenly, you know, well, not suddenly, I suppose, but over time, just starting to realize, hey, this is no longer working anymore. Let's move over and see what else is working. And for example, right now, anchored VWAP has really good win rate percentage, and it's just being on top of the game and not becoming like too complacent and thinking, oh, this is going to work forever. Yeah, because obviously nothing will do that.
No, no, markets change. The people who are in the markets change, and over time, so do the tools. I mean, the effectiveness of the tools. But I thought that was a really good overview, and I appreciate you for taking the answer.
Thank you.
Hey, so Igor, we just have a couple questions left here. So to our audience, if you do have questions or if you have anything that you're curious about, please feel free to put your questions into the chat or into the Chart Champions Discord, and we will answer them here shortly. So last couple questions here, gentlemen. Igor, off to you. What would you say your top recommendation would be for someone who's just, let's say, just getting started out to consider?
Ooh, okay, that's a good question. Right. It's like if I could go back in time and say to myself, just look at this, right? That's a really, really good question. I love it. There are a few things. I mean, I believe I earlier did a good job of showing like the market profile. That's definitely one. But I think I would even go back and make it even more simpler. I would just really stress the importance of zooming out and looking at the open, the high, the low, and the closes of the days. And I think if you've, I mean, there's probably a lot of champions watching and stuff, but if you all see my charts, you know I use the bars instead of the candles. And you know, sometimes I've changed them a few times because of like some people were saying, oh, we can't quite see it, but I just love the neutral color. And more recently, my candles or bars are just white. And the reason for that is because I just want to see where it opened and where it closed. And for example, on the stock and Bitcoin crypto as well, it's the same thing. It doesn't matter the market, gold, futures, crypto, Forex, it all is the same. So for example, on ES, like the highs, the opens and the closes, as you're coming down to say a level of interest that you're interested in longing or shorting, if you zoom out and you can put the bars there and you just look left and look at what it is, like let's say, is there a level, like for example the other day when I was looking for that 54.82, you just looked left and you had two amazing confluences, and that was the open of a daily bar on the S&P, as well as a value area low. And it was just incredible value, information that just by zooming out, you can really hone in on that trade and just let it run. And I did an amazing trade just by zooming out. And I think if I could go back and say to myself, you know what, stop wasting time on this, and that, and just really focus a bit more on that key piece of information, because it just gives us so much data. Like, are we opening and then moving up a little bit and then just going down? And is it bearish, for example? Just follow that open. And over the years, again, you've seen my templates, with the yellow lines just really, saying, here's the open. That's kind of like, I'm interested on that line. I want to see, like today on BTC, just, yes, before up, we need to go down first. That's where we fill the orders. If I could go back and say to myself, what would be the one tool? I would say definitely study that open, high, low, and close. Put a bar on your chart. Like just let me just share it very quickly, just to show how it looks, so that new people know exactly what we're talking about. And then I'll leave it alone. But I think it's very important. So I'll just go live. Daniel, if you could share it very quickly, and I'll just go like this.
That's working now, mate.
There you go. So you should be able to see the bars, but I'll make the bars a little bit thicker. I think we can do it here by doing thick bars. There you go. It might not, it looks a bit, yeah, there you go. I'll make them smaller. But what we're looking for is the open. You can see this is the open of this bar. Obviously the low, that's the high, that's the close. These are the things I wish back in the day I spent more time looking at this than anything else. Like you mentioned RSI earlier, different things, moving averages. I mean, I like moving averages now. To be honest, I really like moving average, but I only look at them on certain time frames, which you all know about. But yeah, if I could go back and say, what to look at and what to really focus, this right here is the real deal. Because it just gives you that, what is actually happening here. Like, for example, today, I mean, look where we open and look where we close. Yes, there's a massive gap, but go with that strength. And the market's still going higher. So it just gives you so much information, and I love it. And when you zoom out, this is a daily time frame, RTH on the ES. And when you then put a new chart next to this one on the 1 minute, you can take one scalp a day or one trade a day, and that trade will most likely be that one trade that you can just say, okay, this is the pay the bills trade. There's so many, and it's based on those levels. They've got so much respect. Statistics are incredible. Anyway, I digress. There you go.
No,
Open,
that's
high,
a
low,
really
and
great,
close.
really nice, simple, effective tool that I think everybody can, even if they're not using it day to day, and like let's say they're scalping charts, they can use it on a higher time frame, or just even peek at it every now and then just to see, let's just say, where price opened in relation to the last candle. Because as we've seen, there are some interesting statistics around that Coach Severin has brought to our attention, as well as developer Lorenzo, that if, let's say, a candle, the daily candle opens within the top quartile of the previous day candle, that that likelihood of the high getting taken out from the previous day is actually pretty significant. So and that you can all see just with these candle bars, not the candle bars, excuse me, just the bars.
Yeah, 100%. Yeah, I wish I'd spent more time in the beginning with it, but yeah, it's a tip.
And it's really easy to get, I would say, speaking from experience, it's easy to get caught in the candles, to get caught in the green and the red and the all the nice fancy colors that really lure you in and make you, they're very pretty, I'll tell you, they're very beautiful. But at the end of the day, what matters is price and risk management. So take that forward with you, and I think you'll be very good. All right, last question
100%.
here. or Daniel, what would you recommend as maybe a must-have tool for perhaps a more advanced trader, someone who's further down in their trading career, maybe looking to make their trading system a little more complex?
Yes. For me, it would yeah, I would say probably definitely have to be order flow. Um, So there's like you can go way in more in depth with order flow and starting to look at DOM, for example, like Igor, or you can keep it more even more simple. But overall, getting into the realm of order flow, so seeing the data live in the time, like you earlier you made a good point of like RSI, and I think RSI is like an indicator that many people like start on, right? It seems fairly simple when you first start. It's like, oh, I can understand RSI divergences, but what you don't really understand at the beginning is for that RSI divergence to print, you've already missed like all the moves. So it's like a bit of a waste of time. Well, again, people can make it work, whatever, but it's a lagging indicator. Whereas order flow, this is live data, live in the time, and this is really crucial. I would say 100% if you're a lower term time frame trader, and also if you're because why I need to say this is because the question more advanced traders, but if you are a swing trader, you do not need to do this. I don't think it's a requirement in my opinion, but it's nevertheless it's only going to benefit you if you do it correctly. And so the most simple way that I would like to use this is mainly looking for when we come down to a significant level, what's the order flow looking like? Okay, so for example, when we hit $70,000 and when we come down and the next level I'm looking at below us will be the naked point of control. So this is something maybe I would love this to happen during the news event in an hour, but less than that now. But for example, a tap of this naked point of control below us. And so when you come into a significant level, so that's the most important time I would say to be looking at the order flow, because you want to see as you come into that level, you want to see how much volume is behind a move, how much delta is behind a move, what's the open interest doing on that move. Like these are massively important parts of the strategy to know whether to buy or whether to hold on, and you can only get that data by simply looking at the order flow, and there's nothing lagging here. You're seeing it as soon as it happens, so we can see at this very minute how much orders there are, how much people are buying, how much people are selling, like actual real time data, which is it's really crucial to make like a informed decision on those lower term time frames. You can also use it in ranges, so not when you're hitting a significant level, but when you're, for example, getting a retest. So we obviously formed that low this morning or last night. But when we come down and retested that this morning, what we could see is, for example, bullish divergences. So again, this is not like lagging. This shows us really in the time as we're coming down for that retest of the low, we can see we had really big bullish CVD divergences. So that just shows us from the CVD that we got a lot of market sellers coming into the market. Okay. And there is what we would
Silly
say
bears.
here. What? What was that,
I
mate?
call them the silly bears.
Oh yeah, the
Silly bears and silly bulls. Yes, it's a
Just-
good interpretation. It's an easy way to remember exactly what it is. So you can put a strategy into a name, and it really sticks. So I call them silly bears or silly bulls, depending on where they trap themselves.
There we go. Yeah, that is true. So we had the silly bears today shorting down into the lows, while you had limit orders holding up price. So they're the smart bulls. And it can't basically it's kind of like Eagle says, like silly people, like who shorts at support down here. You got to be a little bit silly to short support. And then when you see the CVD divergences behind it, it's just like, yeah, you got a lot of silly traders shorting at the lows.
Yeah, I
So-
mean, and that's what I saw. That's what I saw earlier. Sorry, pardon me. We had those silly bears down there, and we took a long. And obviously, it's not gone to complete target now at 67. Call it 500. But first DP has been hit, and price is still moving here around the 66. So time will tell. But yeah, we locked $500 on that trade. So just by looking at order flow and reading data, and using a simple tool like the value area load to know, okay, well, this is not a place to short. And at 65 we were looking to buy, we bought, and we took profits, and a lot of the members were we're happy with it, and so was I. But yeah, continue. Sorry, mate.
That's all right. No, I'm just showing on screen the trade setup that you showed. So just from the group. So yeah, that was obviously an epic trade setup. So yeah, I mean that's what you get using order flow. Like without recognizing the order flow, then you're not going to be able to like take such like precise setups and along with the volume profiles, right? It's just gives like a very good picture of hard cold data in the time. So yeah, that's what I would say really for the advanced traders if they're not already using, which I would imagine they probably are if they're in our group. But if you're not, then yeah, this can up your game. And I really think that this is something that can change you from like even as an average trader, you can be winning and successful with 50%, even less win rate. But this is something that would change you from that 50% win rate pushing to like 60, 70% win rate. I think this can only help you. It can only take you, it can only improve your trading. In my opinion, it will make you take less bad trades, because there are times if you're not looking at order flow, you hit the level and you're like, oh yeah, I've got visually a reaction, I'm going to take this trade. Whereas